All right, what's up, everyone? Welcome to tonight's video. Um, so yeah, I don't know if this is gonna take a long time or if it's gonna be a very quick one. So I just got done with a movie, and by the way, I want to clarify something real quick. I don't watch Friends. Okay, I'm sure some of you guys saw the post I made on Instagram, and it was Friends in the background. I do not watch Friends. Want to clarify that? Need to clarify that. Okay, I don't watch Friends. I don't associate myself with the actors. I don't know any of them. I don't like any of them. Okay, my bad. I'm gonna make sure I don't. I don't like the movie at all. I hate the movie. Okay, so don't associate me with Friends. Okay, don't associate me with Friends. All right, so I just wanted to get that out of the way. With that being said, so I took sleeping pills for tonight. I don't know if I'm gonna be drowsy in the next few minutes. Let's see how this plays out. But yeah, let's talk about Space Fire's action and why we wanted to see this take out the lows, the lows. So essentially, I wanted to talk about intraday changes to delivery, and I'll tell you what led to this. Now, typically before, if it was me, let's see, a few months back, right. Now, I knew this concept already. I've known this concept for a long while, but I never could apply the concept fully. Um, if it was me before, I would look at this as a low to high to low, ultimate trade entry back at the other block. We're going to see bullish prices, which is the same thing. If I'm not sure that if I did not alert you guys to this as a false low, and that price going to take the lows. A lot of you guys have gone in here and you're the wanting to do low to high, low ultimate trade entry long. Literally everyone who claimed they were institutional traders out there did the same thing. Everyone was trying to buy this. We have a low and we broke market structure, and then we're seeing breaking market structure upside. I want to see price trade all the way back down here. I want to buy and blah 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 blah. So essentially, everyone would be wanting to buy this. And I want to talk about what led to me believing this was a sell. Okay, and that is essentially intraday changes of delivery. So this is gonna be one of those things where you want to take notes. I don't think anyone else is gonna teach you guys about this, so I should be thanked for this. I'm just kidding. I'm just kidding. But then, let's talk about this. This is Thursday, Wednesday, Tuesday, Monday's price action. So this video is gonna be strictly for Lazarus program students, and I'm going to lock the video. That way, it's not going out and it's not just being shared around. Because if I'm caught talking about this, I'm done for. I'm not supposed to be sharing this information because I signed a non-disclosure agreement, blah blah, stuff like that. So, with that being said, let's again remember to always protect the content. Don't let anything get out because there's a lot more stuff coming on the way, and I'm putting a lot of work because I'm looking at what's going on. I do apologize for all this commentary before the session, but I'm looking at what's going on around the world. I'm looking at especially Australia, and I know what is going on in Australia right now is the blueprint for the world, just like the same thing that's going on in China. What you're seeing is I just saw a video, which is insane. Uh, and there's just a bunch of you guys who don't agree with my viewpoints, and that's fine. And I'm going to skip this part, okay, if you don't want to hear this long talk. But there's a lot of you guys who also share the same views as myself, and I want to speak to you guys on that. Essentially, those of you guys who've been listening to me for a year, over a year now, and all the things I've literally talked about, they've literally come to fruition. I'm gonna be called a conspiracy theorist and we're this and whatever, blah, blah, blah. But at the end of the day, all the things we talk about when we're called conspiracy theorists, they end up being the mainstream news, and it's like, am I a conspiracy theorist or am I just someone thinking logically? But anyways, looking at what's going on in Australia right now, I just saw the police came to an individual's house and they were trying to arrest him for something is not even done yet, which is going to take part in a protest, I think a few days from now. So they saw his social media account and they arrested him on the basis that he is indicating he was going to be a part of a protest against the government concerning the vaccine mandates. And you can see that is literally fascism. Australia is going into a fascistic state, and it's going to really get bloody. It's really, really going to get bloody. Uh, Plus the fact that the U.S. basically messed up the withdrawal from Afghanistan. France is no longer wants to be allied with the U.S. China is now emboldened. So what I fear is China might make a move on Taiwan because now the U.S. is at this point where it's the most weakened it's ever been since its inception, or in a long time. I can't say its inception because I've not studied history basically, but it's the weakest it's ever been in the long, long time because number one, the country is divided. The people are trying to revolt against what they feel is authoritarian, president. The borders in crisis and all of that nonsense. Just compound all of that, and literally countries like Russia and China, you're looking at U.S. as it's a weakened state, and they can make moves on all of these countries and invade them and stuff like that. You could even see one of the U.S. officials, which was mind blowing, was in support of China and what China was doing in Hong Kong, which is that's literally, bro, that is insane, and that I fear personally. I fear personally because if what's going to affect the U.S. definitely is going to reverberate around the world, especially the third world, and we're going to take beatings too. So anyways, and that's why I really go hard in this because I want you guys to be financially. I don't want you guys depending on the system when all this starts to go down. I want you guys to be really, really primed to take advantage of this, which is why I want every single one of you guys who's listening to me right now. If I'm working my ass off and I'm working every single day and trying to literally be my best self, you should also have the same mindset because I know what I'm talking about. I know what's coming. Okay, and I also want to get you guys prepped for anything that might come well equipped. I could easily go and start build. I think I've been a P1K, very close to P system, almost. I've been a P2K and all of that stuff. Okay, I could easily just talk about building and let's build a team and blah 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 blah. Now, while just lots of money in being the chairman and building and stuff and all of that stuff, I'm definitely am going to get back into it. Once I find a very good schedule. But also, this is literally liberating because, just a disclaimer, typically what your Chairman 25 would do in like a month was what I was able to do in like this week, which is insane. Not live funds, by the way. Sorry, not prop firms, by the way. I mean a live account. Okay. Now that does not mean it's one of my biggest week. No, it's not one of my biggest week, but it's definitely one of the biggest week in the last few months. Let's put it that way. Okay. And you know, it's just me seeing the result of all the work I was putting in and trying to literally get myself back up from one of the lowest point in my career. That was the last few months, which you guys went, you went through that phase of my own personal career with me, where I was losing doubt in myself, and just me working my ass off and getting back on track and literally killing the game right now. And it took a lot of work. And I just want to put it out there that you guys can also do the same thing. Like, just nothing, there's nothing special about. I get messages in my WhatsApp because I have the link on my WhatsApp to my WhatsApp on my Instagram. Uh, I think my Twitter too. So I guess some people on my WhatsApp like, bro, I look up to you like you're, people like praising me like you're a god and stuff like that. I had one person message that to me on Twitter today. Like, bro, meeting you will be the best thing in my life. I'm like, bro, I don't see myself as that person, bro. Like, come on, chill. I'm just someone who works hard, and that's all. Just there's nothing special. Okay, there's nothing special about this except the work you're putting in. So if you can put in more work than the next person, definitely it's going to reflect in your results. Definitely it's going to reflect in your success. It's going to reflect in the goals you're chasing, and that's what I want all of you guys to do right now. If you have goals that you're chasing, I want you guys to lock onto that goal, laser focus, and that's what drives you on a day-to-day basis. because you know what's at stake. Okay, so enough of all that around. Let's talk about change in state of delivery. So let's see. This is gonna be the 10 minute mark. Okay, so I'll make an announcement that you guys should just skip the 10-minute mark for the analysis if you want to skip all my talk. I'm being more like ICT because ICT does this long commentaries and never gets to the point. I do apologize about this. I won't do this next time. All right, so on Monday we had that initial consolidation. And what are the levels? First, I wanted just want to go out to the daily time frame. I mentioned this as a important point. You can see we trade up into this, which is a volume imbalance. Okay, I traded up into this, sold off, came all the way back up here, traded up into this, closes completely, which you were there with me when we called this. You can see the bodies of the candle respecting that volume balance sells off. Initially, wanted to see price get down here, but we're able to manage risk efficiently and not take many losses here. So you can see the way I managed risk without taking lots of losses when I knew I could most likely be wrong in my analysis. And what we just simply did was we trade down into this, trade all the way back up, and then boom. So if we take out this high, obviously it's going to be a breaking block because now we have a short term no breaking market structure, which is the upside. This becomes a breaking block and it becomes a point of focus. Now, I wanted to see this, like I mentioned yesterday. On the go live, I did not really mention this, but we have a sell side imbalance here from the candlestick low to high. And we have a mitigation block. I talked about this mitigation block before, and that is the open of the candle. That was a mitigation block. And plus, we also have a buy side imbalance, but you can see that did not close completely, like I said, it would not do. Okay, I mentioned that I don't want to see it close completely. I don't want to see price run higher. Now I think you could trade down into that. Okay, that is permissible. For in the bullishness, we have to remain above this. I don't want to see it get down into this. So I want to see if we can get down there tomorrow and then bounce higher. So that will be most ideal for this. It could get down to there, but I'll favor seeing price trade down to this and then run higher. Now, what led to the analysis for the short side spec? Now, typically when you get something like this, where we trade down into the BC, which is now a balanced price range, okay, we traded down there on Tuesday, and then on Wednesday we traded deeper on Wednesday, okay. Monday we consolidated a little bit, Tuesday we traded lower, Wednesday we traded into that mitigation block, and then we rallied, okay, from Wednesday. Now on Thursday, I was looking at seeing that expansion up. Why? Because we know that the banks they buy in bearish candles. Down candles parts of expansion they're buying. So every turning point like this down candle you're buying. Candle you're buying. Okay, so when we see down candles like this, when we're anticipating bullishness, that is we love to see stuff like that because that indicates that there's going to be an expansion in the marketplace. Right? And I was thinking, okay, this is gonna be the next level we get to, and then we run that out, and then we can use this as a breaker block or something like that. I was actually watching out for, and only for me to because I woke up very very late for New York session today. It took me a while to like wake price. Only for me to wake up today and throughout London we've traded all the way down into this. Now, question: why are we trading all the way down into this? What's the reason why? Okay, we have a low here. This is a low. We trade down into that mitigation block, took out the short term low, never really closed on that gap, expanded higher. What is your eyes automatically going to? Your eyes is going to where's the last up candle prior to the run lower? That is your breaker block. Do we get a sensitivity of that level? And you guys would have seen the trade I did in gold because I was using this. This was the idea I was using in gold. Okay, for that run lower. I wanted to see if price trade down to breaker block and then expand higher. Now, when we see something like this, and then we run just above that short term high and then quickly pull away, we do not want to see price trade lower. Why? Number one, we wanted to see this utilized. Came very close to that level. I think if we got to the 5 minute time frame, that would be a breakable on the 5 minute time frame. Let's see. It's actually not. Okay. The price came very, very close to this. So this MIs is still utilized for me. Now, whenever I've seen institutional auto flow drill, like I teach you guys before, that simply means whenever we trade into a level of inefficiency, what's that level of inefficiency? We have this low to the side has inefficiency. Okay, within the breakable. We have a low to a high. Okay, whenever we see something like this and price trades down and reject, you do not want to see price trade back into that level, especially if you're bullish. Price should leave that level open as it indicates strong institutional order flow. Now, if you see this, then come back and trade below, then the likelihood that we're going to close in this is increased significantly. Okay, that is the likelihood that we're going to close in this. That is increased significantly. Now, what do we have below this? We have equal lows. So this to me, once we break below this low, that to me is a break in market structure. Okay, we have a low high, price runs out liquidity. If it's going to make any retracement, it does not need to get all the way back down to this and close and start going bullish. That would then mean to us that maybe it's reaching for something deeper, like a sell side liquidity, like this daily busy buy side and balance sell side efficiency. And that was the bias that was going into this. That was the bias that lent into this as a bearish stance. Okay. I was watching Prime like we could see bullishness from here, but it does not make sense because we've traded all the way down into this. That means we've had a chain of sale delivery below this level. So what are we doing? We're seeking sell side liquidity. Price trades up into premium, sells off, trades up into premium, sells off, trades up into premium, sells off before running out that excuse me. And then if we translate that into your dollar, obviously I drew that trend line. The trend line wasn't really what I was looking at. Okay, I just drew the trend line because it's go live and I'm looking for. I'm trying to keep it as friendly as possible, not give out the information that we're going to discuss on the last program, which is only for you guys. So I was just using this. That was like an added bonus, but that was not really the situation. Going out to the daily time frame, daily time frame. Okay, now what I was watching on the daily time frame was this candle. When we're seeing this candle, whenever you see situations like this, so let's talk about this real quick. Whenever you see situations like this where we trade down into low, we're about to trade down into a low, we have a significant retracement and then significant retracement. Each not You don't want to see any deeper premium. You want to see price just roll over and take out the stops. Typically, that's what you want to see price do. I'll show you an example. We have rejection blocks here. You can see this candle go up just like this. Next candle runs through it without making significant retracement. That's what you want to see. This is an example. We have a low here. Next candle rolls over through that low. This is an example. Price is all the way back up there. If we're looking for a run above this, it runs quickly to take that out. No deep retracement. That is classic price action. Okay, this is an example. Okay, we have this next candle, boom, takes all of that. We have this for this low, next candle trades deeper. It's reaching for liquidity. That's the way price is supposed to be. Okay, next candle here, price consolidates a bit, trades lower, does not really trade deeper, and then runs higher. Okay, you can see this does not really trade deeper. Positional influential drill runs higher. And now on this, okay, we trade down into this, rejected. Next candle trades up, back down into that daily negation. Next candle trades up, takes out all the stops from the previous day, and then sells off. The next candle is supposed to be an explosion back to the downside. So we don't want to see any ultimate trade entry level because I saw this is not so bad steady. I saw John Dollar and steady call this out as a sell. I'm like, bro, that's not a sell because everyone else, even everyone who trades institutional, will go in and looking at this as, oh, it's ultimate trade entry, buy, and you see this and price is going up to the breaker and sells off. Number one, we don't want to see price get back in closing on this. We do not want to see price get back and closing on this. Even though this might look like, oh, it's equal lows to you, stuff like that. No, we don't want to see price get back closing on that. Why? Price has shifted to the upside because if it was supposed to roll over, it should have been stuck within this range. Why should it have been stuck within that? Now, I want you to think logically. We have a low here. We have a daily low here at 1.66663. Okay, we have a low, high, low, stop is here. We take out the stops. Anyone who was looking to be short, we've taken out their stops. Is there any reason why we should come all the way back up there? No, just no reason. We've taken out your stops, okay, all the way back down. On what's it called? DXY, we had an institutional influential drill on DXY. Okay, we did not see that same thing over there. What would have been looking at was, okay, we have low to I to low to higher I, then we decline. All right, if this is going to be a breaker block, why are we trading through the breaker block? Because we're trading through every premium level and we're respecting discount. Trade through the breaker block, we're closing in on the gap, we're trading deeper into this, and it looks like when it's closing this. But if you look at the discount levels, you're being defended. Well, push to the block, trades back down to it, expands. Okay, expands, trades all the way back down to this level. What is this level? That is that daily VC. Now, what does that make this become? It's a balanced price range. Buy side imbalance, sell side close. It's a balanced price range. Now, what I teach you guys about balanced price range? If your directional premise is correct, we want to see price trade back into a balanced price range and continue the sells. So, what are the levels in a balanced price range? Just like every fair value gap, the discount low, the consequent encouragement, the premium on. Okay, once you start seeing price trade through the balanced price range, that tells you you have a shift in market structure. Ooh, I just taught you something new. That is something new that I just showed you guys. Let me show you an example. So I think we took a trade that was a loss. There was this one time we took a trade. No, it was not a loss. It was a break even in EU. And I mentioned, okay, yeah, that was last week. We were taking train down to this level. Yeah, that was last week, 14th. So let's go to the 14th of the month, and we have this. So we had a buy sell imbalance, trade down to this. You can see the reaction off of that. That's a fair value gap, not a buy sell imbalance. This is a bullish fair value gap. That will trade down to that. Essentially, consequent approach when we sell price go higher, right equalize, then we broke down. Okay. Once we broke down, it becomes a balanced price range. And I mentioned that I wanted to see this offer resistance and then sell off. And what you can see is it consolidated around that level and shifted. So whenever you see a balanced price and traded through, that indicates a shift in market structure. This is advanced, way advanced price action knowledge. Whenever we have a balanced price range and then we trade through that balanced price range, it indicates there's no resistance being offered, and we've shifted market structure and can see consequentially, excuse me, uh, we shifted to bullish line. Okay, we just shifted bullishly. It's a balanced price range. You can see balanced price range offers resistance, breaks above, straight back down to that, straight higher, runs out equalize. and that is the same thing with your dollar. Okay, we have a daily balanced price range, and that was why I mentioned I did not want to see price trade up into this, because if we've traded down and then we tested that balanced price, look at this, tested this, I would have wanted to see this as a shorter opportunity. And if we'd remain here going to London or leading up into New York, I would have been looking for shorts. I bet you I'll be looking for shorts because I didn't catch this the sell. Okay, I was really able to on gold. Unfortunately, I got stopped out before price dropped. Anticipated. So I would have been looking for shorts this session. But the fact that we traded through, and look at the way price respects that day level. Trades down, breaks low, boom, test, test. Look at this week. This week trades exactly into that drop. Trade up into that, trade down, closing on this small little imbalance with a discount low of that daily bounce price range. We expand. Where we're expanding to, from you can see if I pull up the Fibonacci, you're still going to see sensitivity around the concentrated correction, which is the 50% of the bounce price range. Essentially, it's 50% of the bounce price, and that's where we consolidate, and then we break higher. So this was a confirmation to me that we've shifted the trend because if we wanted to respect this, if now it's permissible that I can trade through this a little bit, but if we wanted to respect that, I should not do this. That was to me that was shift the trend. So my bias was okay, institutional financial drill, this gets upside. Now the other thing I wanted to talk about was which is what one of you guys asked me was but this was not an ultimate trade entry like I teach for buys. Why did I buy this? Even though it was not an ultimate trade entry level, okay? So you can say, oh, I use this low, or I use this low. If it gets down to ultimate trade entry level. What I was using to frame this setup was a change in sale delivery. Now, all throughout this, the algo is reading this as a balanced price range, meaning it's premium, okay? It's a premium level, especially if you view this in the context of this high to slow. It's a premium level. Now, inside of this, okay, price is offering premium. We have a sell back down into the discount of the bonus price range, which is anything below the 50% is the discount of the bonus price range. Now, when the discount of the bonus price range, that's when we start to accumulate longs, and then we expand. So what I'm watching is we have a change in state of delivery. You want to listen closely. We have a change in state of delivery from a premium offering sells to discount offering longs. Where did we change that state in delivery? One, two, three. With the last bearishness. What was the last bearishness? Not where the last. One to three down candles was the last bearishness before we started to upside. So that to me means that the change in sale of delivery was from the open above. That was where we had that change sale of delivery. So if you pull your Fibonacci from the open of that candle to the high, that is the ultimate trend level. This is a more advanced form of Fibonacci usage. And you can see, yeah, bro, this is insane. This is insane. Guess where the eye of the day forms? You should be taking notes, taking lots of notes. Okay, when I'm taking notes and notes and notes and notes. High of the day forms exactly at the one standard deviation of this. That's literally 200 extension, 200% extension Fibonacci of this. If you'd use this, it will not make sense. If you use this, it will not make sense. If you do your Fibonacci from here, it's not going to make sense. If you do your Fibonacci from here, because that is true algorithmic principles, you get precisely this. And I wish I could show you guys. I did partials here. What I'm teaching you guys is next level stuff. These are some of the things I do privately that I post on Instagram. You guys are like, why did you not send it out to me? So that's yeah, that okay. It's just I'm just so happy that it works. Things that I'm calling out actually works. Now, what was I looking at? $2 dollar for longs. I posted on my Twitter. I think Nick posted that on the Discord. I intentionally knew you guys were on euro dollar, and I did not want to like. Didn't want you guys getting into $2 dollar, which is why I posted on my Twitter page, not on the Discord, obviously. Now, I was wishing this because going out to the daily time frame, you can see, like I mentioned on the Go Live session, we have this rejection block, price trades down to the rejection block, trade higher, trades back down to the rejection block. If you want to be bullish, you should not have taken previous day's high. That's my logic. So the fact that it took previous day's high to me indicated that it was no longer bullish, and it was probably going to fill in this inefficiency. That was a bias. So we had the sell side imbalance bias and efficiency, and then we had the bearish rally. This is a sell-side imbalance by setting efficiency because it's larger in size versus this, which is just small in size. That is a bearish rally. So we'll go out to the 1 hour time frame. What are the areas there? We have all of this. This appears as high. Price trades down, down, and down. This is a BC. Okay, you have a BC within that daily imbalance, daily CB. You have a BC. Extend that out. Boom! It's a balance price range. Why did I use that soundtrack? All right, so it's a balanced price range here, and look at the reaction. You can see we trade up through that and trade exactly down. Now, this is institutional order flow entry drill. This is what you want to see balanced price ranges do. It's just like we would have wanted to see your dollar do that it violated. So when you saw this violate, that is telling you that it shifted delivery from bearishness to bullishness. Same thing on the US dollar. You can see we break through, we retest, and that's why I mentioned on the tweet I don't want to see price go past 1.3694. Now, typically, I would not have wanted to see price go past this. So I would have kept my stops at, let's say, 1.37 big figure number because I could permit that to go past the rejection block as an SM2 divergence and then react. But just to be safe, I didn't want to see price get down here. Because if price got down into this, which is what everyone else was looking at, everyone is going to look at something like this and then they want to buy here. They want to wait for price to get into this and then they want to buy. If price gets down to there, it's an old eye. That's typical retail logic. Retail logic goes old eye, old eye. If price gets down there, I want to be a buyer. We don't want to. We're not using retail logic. Okay, so basically what I was looking at was a buy of the consequent encroachment of that daily CB with a 5 minute bull shadow block and an optimal trade entry level. What is the optimal trade entry level? We have low to high, boom, bull shadow block, trades higher, pull your Fibonacci from low to high, discount, 5 minute bull shadow block, daily consequent encroachment, expand to where? Guessed it, 1 standard deviation of this range, blended with the discount law of that daily fair value gap, plus an institutional level, 1.3750, all of that blended together, and I was able to call the eye on $3 So hopefully this was insightful. I'm about to go to bed and enjoy my night, and then I'll catch you all tomorrow. So, yeah, you guys have a wonderful night.